markets and more now with Pankaj Murarka, who's joining us live right here on Closing Trades. Good afternoon. We're in the last, 1 hour, 15 minutes of trade. It's the biggest correction that you've seen in 6 months. What do you make of it?
Hi, good afternoon. I think, this is the first big correction that we are seeing in this bull market that has been on for the last 20 months. It's been one of the most furious bull market that we've experienced in a very long time, and it's been quite some time since I think many people on the street were anticipating or expecting a correction, because there was a very high order of retail euphoria all across the markets. So I would like to think that from a medium term perspective, this is a very healthy correction to set into the markets, and probably once this correction settles down, that should be an opportunity for investors to step in from a medium term perspective. I don't think so anything has changed from a outlook on the markets when we are thinking it from the 1 year or 2 year time horizon.
So it's in this biggest correction that you have seen in the last 6 months, and what you're also calling the first real correction in this bull market. Pankaj, can I ask you what you use as an opportunity to buy?
Yes, certainly. So we were actually sitting on some cash which we've created over the last few months, and probably we would like to dip into into this markets probably a few days or probably weeks down the line once this correction settles down. We remain quite optimistic on the outlook for the Indian economy going into the next year. Next year should be the first normalized year in the post-COVID world for the Indian economy, and we remain very positive on sectors which includes essentially investment-led. So we are very positive on India's investment cycle and the revival of capex, because we're already seeing some of the very large companies, industrial companies announcing very meaningful investment plans. Also, we are extremely positive on consumer discretionary, because we think as the economy opens up and the kind of job creation that we are seeing by virtue of the hiring from IT companies, we'll see a strong growth in discretionary spends from consumers over the next few years. So these are some of the sectors that we're looking forward to buy into.
We're seeing today the pocket of green that we're seeing, Bharti Airtel, that's currently up 3.5%. It's trading around 740 rupees a share. That's after around 8 a.m. It announced today that it's going to be they announced a price hike. It's across the board tariff hike, working out to be almost 21%. It's much higher than what the analyst community had been factoring in, what the markets had thought it would be, which would be 10 to 12%. Now, a few months ago, after the rights issue, Sunil Mittal had actually surprised analysts on the conference call by making an appearance. And that's where he spoke about 300 rupees average revenue per user being the desirable number, but more realistic could be 200 rupees. This was followed up in a press conference as well. Here is Sunil Mittal talking about that. It's a refresher that we get to you.
We were at 204 rupees before Jio came in 2016 September. And at that time, the consumption of data was less than 1 gigabyte a month. It was more like 850 MB. Today, we are at less than 150, and the consumption is 16, 17 gigabytes a month. So the deal that has to be there for the customers is they must enjoy the data that they are used to now, 16, 17, 18 gigabytes. But can we just go back to where we were in 2016 when they were consuming 1/16th or 1/20th of what they're consuming today? And in real terms, after 5 years to spend 200 means they're actually spending 160, 170 if you count for inflation. So that's all we're looking at. So that much we have to get to. Without that, you will be in either negative or low IRRs for the industry. That cannot be acceptable for an industry which has massive capital expenditure. Which industry, whether take large fertilizers, refineries, steel industries, which industry spends every year 20,000 plus crores on its capex? None. And then I'm not even adding the spectrum, which is another burden that comes every 1, 2, 3 years. So 25, 30,000 crores, it has to go every year. And this is not going to stop. 5G will move to 6G, more digital requirements will come through, more data centers will be required. You need to generate capital. And then you finally, for God's sake, after 25 years, need to give something back to the shareholders. So it needs to get to a right level. My desirable level is 300 rupees. That will be bold. I think that we are not anywhere close to, but to get to 200 will be a very justified approach to tariffing.
The word coming in from Sunil Mittal, and finally the one to take the lead when it comes to a tariff hike, and a significant one at that, 25% for their prepaid user base, which is nearly 95% of their total subscriber base. Pankaj, but the point is, from those 300 odd levels all the way to 735 where we're currently at for Bharti, is a higher ARPU not already in the price? Would you buy at 700 plus levels Bharti afresh?
Aisha, we'd spoken about this quite some time back. I firmly believe that the telecom sector is in a structural growth framework in India. For me, telecom as a sector is a buy, not from the next 6 months or 1 year perspective, but more from a next 10-year perspective. Because if you look at the construct of the sector, essentially where we were from an industry perspective, we had 10 players, and from there, and a market which was completely fragmented. From there, we are down to a situation where it's become an oligopoly kind of a market with 3 odd players and a government-run player. Whenever any industry goes through this kind of transition, what we've effectively seen is there is a return of strong pricing power in the industry. And this is what exactly I think Bharti has done today by exercising that pricing power. I think the pricing power in the telecom industry is here to stay for a very long term. So I think telecom as a sector and Bharti as a stock is a buy from not only from a short term perspective, but even from a much longer term perspective as well.
Kunal, on the more long-term charts, given the kind of move that Bharti has had, and this has been, we've often joked about as to how Bharti in the past has also tested patience of its investors. Now that it's broken free out of that zone and it's well above the 700 plus price point, and 735 actually in trade right now. On the long-term charts, what can Bharti scale up to?
I think, so yes, Aisha, for one, we were discussing about Bharti Airtel since quite some time, and how that the stock has been, one of the few stocks which has tested a lot of patience. In fact, there was this period for Bharti Airtel just about start of this calendar year, where the stock was, gyrating at this 350 to 550 levels, and it was getting very, very difficult for the stock to try and break past about those 550 barrier. But the time it happened, the previous quarter, I think in the month of August, if I'm not wrong, is where the prospects for Bharti Airtel improve significantly. Now, of course, when you see a construct of the markets like what we are in right now, where the major large cap names are getting into a corrective phase, it's it's but natural that maybe somewhere down the line, even Bharti Airtel can get into a corrective phase as well. So it might be maybe profit booking, which could probably seep into the stock, M2M filling, or such other phenomena which could probably impact the stock price trend. So one has to be ready for maybe a short-term corrective wave for Bharti Airtel. But then on the other hand, from the long-term point of view, the rally and the breakout which had happened for Bharti Airtel 3-4 months back, and specifically the breakout above that 550, 540, 550 mark, which was the previous major high for Bharti Airtel, is a very strong and decisive breakout, because it manages to lead the stock into at least a 10 to 11 year of price pattern breakouts for itself. So if you look at it in 2007, 2008, the stock made a high of closer to 495, 496 on the spot levels. Then it consolidated for the last 10 years, gyrating in a range of 200 to 250 points from there on. And finally, you've seen the breakout happening about those 500 levels for Bharti Airtel just about a quarter odd back for the stock. Typically, when you see such kind of price action, and if you remember a very cliche kind of a like-to-like example would be Reliance Industries, where the stock remained in the consolidation for 10 years from 2007 high to 2017. The breakout level for Reliance at that time was approximately 550 levels. And you've seen what has happened from 2017 to 2021. The stock made a high of 2,750. So a rally from 550 levels to 2,700. I'm not saying a similar extent could probably happen for Bharti Airtel, but these are the kind of breakouts which typically happen when you see a 10-year to 11-year kind of a price pattern breakout. So I, for one, believe that possibly over the next 1 to 2 years, you could probably see Bharti Airtel scaling up higher, maybe crossing even that four-digit mark as well. But when you ride such kind of trends, it's very difficult and probably naive to try and look at a possible upside. You just have to ride the entire trend till how far it lasts. I for one believe that this could be a multi-year uptrend for Bharti Airtel. Maybe 1,000, maybe a 1,200 could be a possible target over the next 1 to 2 years at least.
Right. Okay. Since we're talking about Reliance and drawing some comparison, although dated at that, let's talk about what happens to Reliance as well as Aramco deal. And a range of possibilities have now emerged, and it seems that both the parties have chosen to go back to the drawing board. Having said that, my colleague Ajay Sharma spoke with a whole host of people who were very close to the deal, and now that it's been taken back, let's try and analyze what could be the way forward for both Reliance as well as Aramco. Ajay is here with the exclusive details.
Right. So our top sources who have been working on the Reliance-Aramco deal for the last 2 years tell us that there are a range of possibilities which have opened up, and the urgency to raise money after demerging the O2C business doesn't really exist for Reliance anymore. Their O2C business, refining and petchem, has been on a considerable upswing and is throwing a lot of cash, which may not be required to sell stake anymore after demerging. The other thing is that a lot of sovereign wealth funds and financial and technical partners are approaching Reliance already for picking up stake in their new energy complex as a whole, which will take into account the new energy business along with O2C. So then also there is no need for demerging the O2C separately and then selling stake. So we understand that a new deal could actually re-emerge with the passage of time. They are going back to the drawing board and restructure the deal and may look at the entire complex inclusive of O2C whenever talking to any partner, including Aramco in future. So clearly there has been a lot of time has passed and there is no urgency to raise money, plus different partners are approaching, and overall valuation also have moved up after in the last 2 years, and that is why there was a need to re-evaluate a deal. And remember, don't forget that Reliance remains RIL's preferred partner in any energy business in private sector, fresh capex. So RIL will always be along. Aramco's chairman is a part of the board now, so there is no differences which have occurred, no in the thought process for the both partners, just the need to reevaluate and look at the deal in a fresh manner, especially with new energy business also coming now into the picture.
And you're seeing Reliance Industries today, in fact, trade with a cut of 4%. A lot of brokerage firms had come out that this is not going to have much of an effect, though you might see a negative reaction, a knee-jerk negative reaction, a short-term one. Pankaj, what's your strategy when it comes to Reliance? It's even trading below 2,400 rupees now. What's the trigger to watch out for?
Well, we don't take a short-term view on any stock or business for that matter, Nayantara. So I'm not really sure about what happens on the stock over the next 1 month or so. But I firmly believe that from a longer-term perspective, we'll remain positive on Reliance because one, as I said, our base view is extremely positive on telecom as a sector, and now Jio has emerged as the largest telecom player in India. And apart from that, there are other businesses or the other growth engines, which includes the retail and the internet businesses. They're also firing very well. So I think slightly more medium-term to longer-term view, the stock remains, the view on the business remains very positive. There could be some short-term correction in the stock because of this news flow around the deal with Saudi Aramco not going through.
Right. Okay, today though, you are seeing quite a bit of fall on RIL. I don't know whether it's because of the Aramco deal not going through or whether it's the overall market per se, because look at a Bajaj Finance and Finserv, for instance, they've fallen in excess of 6%. Tata Motors is down 6% again. You've got a Titan which is slashed about 5%. SBI is down nearly 5%. Now 480 is where SBI is. Kotak Bank is down 4%. Axis is down 4% again. And you know, Pankaj, since you have a knack for identifying businesses before the stock market does, just wanted to understand what your opinion is on the entire BNPL slash fintech universe and how it's shaping up, whether or not banks will be able to attune themselves to this fast catching trend, although Bajaj Finance already has. But just wanted to understand that, given the backdrop of the underperformance that we've seen from banks at large, how are you positioning yourself within the Nifty bank components right now?
Very good question, Aisha. So, Aisha, we remain very positive on this whole microcredit, including the BNPL that is evolving in India. Currently, if you see the aggregate BNPL outstanding of credit in India is very small, roughly about $2.5 billion, but we think that will grow at about 50% CAGR for the next probably 7-8 years and should become probably anywhere between 5 to 7% of the overall bank rate in India. So I think the opportunity is huge. It's all about ability to execute, because you are lending very small ticket size of loans, which could be as small as 10,000 or 20,000 or 50,000, and the ability to recover or do the collections efficiently. Because in case of a customer default, it's just not possible to pursue the customer and get the money out. So I think, and I firmly think that at least not all of the banks, but some of the banks will certainly have a significant play in the segment, because banks also have invested significantly into their technology backbone and a technology architecture over the last few years. And they have caught up with a lot of these new generation fintechs very well. So I don't think so the banks are going to give it on the platter for the fintech. So I think there will be a fierce competition out there, and the traditional banks are going to compete very fiercely. For example, if you look at the largest state-owned bank in India, State Bank of India, through their app, the app, they have been doing amazing amount of work on their personal loans and so on and so forth. So I think the banks are catching up, and they're going to give a run for their money to a lot of these fintech players. So overall, I think that's a huge opportunity from a BNPL perspective, and I think Indian banks will capture that. From an overall banking sector perspective, we still continue to remain our positive bias on private sector banks, because we think as credit growth picks up going into the next year, both from consumer borrowing and corporate borrowing as the capex cycles gets into place, I think banks will be back to their growth trajectory, which has not been the case for the last 18 months, because the credit offtake has been pretty low post the pandemic. But I think that will change next year.
Right. So, point being, what stocks are you going to buy in the current decline which is taking place?
So we are looking at some of these internet companies also very closely, though I must say that the valuations there are in some cases outrageous, not only rich, but they are outrageous. But as I said, we're looking at these companies closely because from a growth opportunity perspective, I think it's a secular growth opportunity over the next 10, 15 years. Because it's very apparent now that India has the second largest smartphone user base in the world. And we're just opening our internet economy. So that space from a growth perspective looks very exciting, though valuation remains extremely demanding. Apart from that, we are extremely positive on the capital goods space, because we are seeing very concrete signs of revival in the investment cycle in the economy. We're already seeing some of the large companies, let's say Tata Steel or Hindalco or a Vedanta, making significant amount announcements for capex over the next 3 years, 5 years, and so on. So I think India's investment cycle, which has been missing for almost a decade now, will get back going forward next year. And I think this could be a cycle which could be in for the next decade. So I think, we like the capital goods space, not from the next 1 year, 2 year perspective, but from the next 10 years perspective.
Interesting. Okay. Let's take stock of what's happening with the market, because now we're down 460 points actually, if not more. 2.6% down now for the Nifty futures alone. And look at the breadth. It's only 5 names actually which are standing in the green. Bharti Asian Paints are the only ones within the large caps, to be honest. Idea, of course, pushing higher. Indocin, Vedanta as well doing a little bit. But besides that, the way some of these broader market contenders are bleeding, especially within the specialty chemical space, be it Deepak Nitrite, Aarti Industries, even some of the mid-cap IT names, Naukri, etc., they are the ones which are falling quite hard. Even PVR, after that phenomenal run that it had when the Maharashtra theatre reopening date got announced, since then it slid quite a fair bit, and today alone it's seeing a 7.25% fall as we speak right now. Where within mid-cap IT, Pankaj, are you finding comfort to even stay put or maybe add on to declines, assuming that you're still a long-term believer in the Indian IT story, or large caps as well added to that pool?
So, which I am, I firmly remain in the camp of strongly believing in the strong growth prospects for the Indian IT services company over the next 5 to 10 years, because I think the whole world needs to digitize, and Fortune 500 companies globally are accelerating their spends on digitization, and that will benefit Indian IT companies. So the way we are approaching the sector is, one, we like the 5 large cap companies in the sector, and we think valuations there, though they have moved up a bit, but they are still reasonable in the context of the growth that these companies are likely to deliver over the next 3 to 5 years. When it comes to mid cap, we are taking a more stock specific approach, and we like companies which have very strong execution capabilities and which have strong portfolio of services, and more so which are focused on the new generation services around digital cloud and analytics, because that is where we are seeing a huge demand from the customers in US and Europe, and there is a huge shortage of talent as far as IT services companies are concerned when it comes to some of these new service capabilities. So from a mid-cap IT services basket, we like companies which have capabilities to execute projects around digital AI and machine learning, and companies which have the talent pool or which can make up for that, so that they can capture the growth that lies ahead. So we're slightly more selective when it comes to mid-cap IT companies.
Interesting. Falling some more for Bajaj Finance, down 6.25% right now. SBI is down 5%. Reliance almost down 5%. Kotak Bank down 4%. Axis, Maruti, ITC, Sun Pharma, BPCL, Tata Steel, ICICI Bank continue to reel under pressure. Naresh, we've often talked about the banking underperformance. But what's looking like the weakest end to you within banks? Does it continue to be a mix of Kotak, HDFC Bank, or do you think in this fall, the ones which have done better, the likes of SBI and ICICI Bank, perhaps would fall harder?
So I would expect SBI and ICICI to be leaders only. The other names like Kotak Bank looks the weakest part out here, because the stock had made a strong move and made a new all-time high, did the best performance. So from being an underperformer from 1600, 1700 levels, the stock went all the way to 2150, 2200 odd levels. So that is one stock which has more downsides compared to the rest of the names. More so because the rest of the names like ICICI Bank has come down from 850 to 750. Axis Bank has come down from 850 to sub 700. So the only space where we have not seen much of a correction is Kotak Bank. That is the one which could go all the way to 1850. But in the current dip, again, the longer term basis, SBI and ICICI continue to be the favorites and the leaders going forward.
Right. Okay, let's move on. Let's take a very quick break. Hopefully, this fall will get arrested. Doesn't seem like the way it's been falling. 17,300 is what we're just about defending actually on the Nifty futures. And the breadth, like I have been mentioning from the start of the show, has been dismal within the F&O universe. We'll take a very quick break. We'll come right back and continue tracking markets.
This is Simi's father. Tying a braid is tough for him. But investing in stocks with Upstocks, easy. Upstocks, start करके देखो.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are the next.
The next generation of visionaries.
Rule breakers, game changers.
We were built to perform on the biggest stages, but we certainly aren't here to do what's been done before.
And neither are we. At Palo Alto Networks, we are ready to secure our digital future. We innovate to outpace cyber threats, so you can make the next day safer than the one before.
We've got next.
My journey of insurance and investments began at the same time, when I invested in LIC SEEP. In this fast-moving world, SEEP can balance your funds with security and growth. SEEP will take care of the ups and downs of the market and will give you fruitful results, so that you enjoy the ride! And when SEEP is with you, you can soar high!
LIC's unit-linked insurance plan SEEP offers savings and protection so that you can soar high in your life. LIC, हर पल आपके साथ.
आटा गूंदना सीख गए तो रोटी बनाकर रुको मत. जरा बेसन से हाथ मिलाओ. तरह तरह के पकोड़े बनाओ. बस रुकना मत. हम भी कहाँ सिर्फ तेल तक रुके हैं. दाल, चावल, आटा, बेसन, सोया बड़ी और बहुत कुछ. आपका वही फॉर्चून अब एक नए अवतार में.
Aim to access opportunities across the market spectrum by giving your portfolio the power of top 500 companies. Presenting ICICI Prudential S&P BSE 500 ETF FOF. NFO closes 26 November 2021. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Weekend golfing. Check. Party throwing. Check. Profile pic. Check. Self-care. Check. Check, 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 check. If you're busy checking boxes, you aren't there yet. Presenting Tata Safari Gold. Redefine success. Reclaim your life.
Physical Shares Solution Private Limited is a trusted name in legal advisory in the world of physical securities. Its wide varieties of services offer solutions for all your physical securities concerns and investment needs. Empower your prosperity with Physical Shares Solution Private Limited.
तो ये स्ट्रक्चर कितने दिनों में तैयार हो जाएगा?
100 days max. आपकी चाय.
So fast?
Yes, Mr. सिंघानिया, इतना ही फास्ट आपका स्ट्रक्चर भी तैयार हो जाएगा. सर, आप चाय पीजिए.
APL Apollo Column, India's first plug-and-play hollow steel section pipe, जिससे हर स्ट्रक्चर बने तेजी से, मजबूती से.
APL Apollo Steel Column. The future of construction is fast. Very fast.
Lucknow has always been celebrated for its ease of doing business, a trait that gave the city strength in weathering the pandemic-induced lockdown. To learn more about the role Lucknow's now rapidly maturing infrastructural and agricultural landscape is playing in promoting cross-industry growth, join the Leaders of Tomorrow Lucknow Town Hall, one pit stop on our Pan-India Roadshow series, only on ET Now. Presented by IDFC First Bank.
सर,
ट्रेनिंग फॉर माय नेक्स्ट फिल्म.
कोई बीमार हो गए और हॉस्पिटल जाना पड़ा तो इतनी मेहनत क्यों? आप तो कपूर हो.
कपूर पर थम जाऊंगा तो यही जम जाऊंगा. टाटा AIG हेल्थ इंश्योरेंस को ही देख, इतना नाम है फिर भी काम में आ गया. ये देख, हॉस्पिटल बिल की टेंशन छोड़, कॉम्प्रिहेंसिव कवरेज, ट्रांसपेरेंट क्लेम सेटलमेंट सब है. टाटा AIG हेल्थ इंश्योरेंस, हुआ ना ट्रस्टेड नाम, फैंटास्टिक काम.
मोहल्ले का पहला डांस स्टूडियो. स्मार्ट है ना?
बिल्कुल. अब मेक अ वेरी स्मार्ट मूव. ARQ प्राइम रिकमेंडेशंस के साथ स्टॉक मार्केट एंटर करो. पेश है स्मार्ट लोगों का वेरी स्मार्ट चॉइस, एंजल वन, आगे बढ़ने का स्मार्ट सौदा.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.
Leaders of Tomorrow, India's largest entrepreneurship platform, is on a mission to recognize and empower every enterprising Indian. With the quest to distinguish the achievers across all sectors, we are back with Leaders of Tomorrow Town Hall. In the 9th edition, we travel to 12 cities across the country, bringing stories of innovation, determination, and drive. In the wake of the COVID-19 crisis and in line with government announcements, we will ensure that all safety protocols are strictly followed so that the backbone of the Indian economy, the SME, is secured. Get on board with Leaders of Tomorrow, empowering a billion dreams. Presented by IDFC First Bank.
9 to 5 job, अरे 5 to 9 job, भाग दौड़, all the time job. The roaming wala job, the deadline wala job, or are you living in the market wala job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. अब life set है.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं. अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई आग से बचाए.
Pankaj Murarka. Back with closing trades, and the closing trades haven't improved anything at all. 2.5% lower still, 430 points down, 17,360, which is just a smidge of an improvement from where we were at the session lows. The breath continues to reel in favor of the declines by a huge margin. 180 stocks still lower as we speak right now. Let's welcome on board Jay Bala then from cashthechaos.com. Jebala, hi, good afternoon. Good to speak with you. Just wanted to understand what's been your reading on the Nifty charts, and while we've fallen 5% from the top, does it seem like the market is in a hurry to deepen the fall?
Yeah, the markets are in the right place, for the markets to bounce. And I feel that there's one last leg pending for this market to complete its move from the March 20 low. So I don't think the markets are likely to get any deeper beyond today's low. And, we want to see the markets take out immediate extreme short-term resistance from current levels. But if the market were to break any levels below 17,250, I think the correction can get lower. At the moment, I'm not envisaging that, but if it does that, we should be prepared for a deeper correction.
Like the weakest hand to you right now, Jebala, in terms of sectors?
Yeah, obviously the banks. The markets are lacking a leg without HDFC Bank and Axis. The key strength in the banking sector is from SBI and ICICI. Even ICICI is a shade weak, but on a relative basis, it's slightly stronger compared to HDFC Bank and Axis. So definitely, banking sector is a now clear avoid for the moment.
What do you have to say about financials like, the Bajaj financial twins, Bajaj Finance as well as FinServ, because they as well in the current fall have fallen about 6%. And ever since the announcement over the weekend of the Reliance-Aramco deal falling through for the OTC business, Reliance as well is cracking quite hard. I don't know whether this is the reaction to the deal falling off, or is it more to do with the overall market correction though?
See, Reliance was anyway due for a drop to 2350 ballpark, and it's doing that. And I think combined with the banking index, financials are again an avoid. While on the longer term, Bajaj twins are quite strong. But for the moment they have completed a cycle move from significant lows, and they made a significant top. So you can see a sizable correction come through for Bajaj twins, but it's just a correction within a larger uptrend.
Jebala, given the pace of the fall today, and as I can see on the screens, it's only Bharti amongst the large caps which is resilient to today's fall, and maybe you can club a Vedanta as well to that list to some degree. Would there be any hiding place?
I would say, in fact, the last couple of months, I've been advocating people to trade this move with reduced position with going to 50% cash. So I think raising further cash would make more sense. And, the hiding places are likely to be some of the cash stocks within the, non-Nifty, space and mid-cap space. But it's for a, retail investor, it's going to be difficult to identify. And, they're also going to be trading bets. Unless you're a trader, you're better off raising cash.
Across the board?
Yeah, that's true. Unless you can diversify into, forex and other non-equity related assets, I think it's better off, raising cash across the board.
Okay, Jebala, we'll leave it at that. Good chatting with you and getting your opinion in as always. Pankaj Murarka, if I could get back to you. Jebala, of course, was sounding extreme caution, but you think it was bound to be a rocky one this week. You've got expiry domestically, and then, of course, you've got the taper tantrum expectations on a global level. And also, there is some disappointment in the street with regards to the 3 farm laws which got repealed, because many are raising question marks on what's going to happen to the future reform course in the country, especially given disinvestment.
Well, I agree with you, Aisha, that this is an expiry week and it's been a noisy week or the last few weeks, and there's been some disappointment with some IPOs and at the valuation at which they've been done. As far as the farm law reversals are concerned and the future course of reforms are concerned, I don't see any risk to that, because I think the government is very steadfast in its resolve to execute reforms and maintain the reforms momentum, because that's very important for revival of growth and for improvement of government finances. And the government clearly understands that, because we live in an environment where the government has expanded its balance sheet very significantly after the onset of COVID, and the government some point of time will have to embark on a path of fiscal consolidation. So I think the government is very keen for a very strong revival in the economy. And I don't see a risk to future economic reforms. As far as farm laws are concerned, all of us know that it's always a tricky issue in India for the last 50 years when you deal with farmers, and then it gets into issues around vote banks and politics. So I would rather leave it there. As far as markets are concerned, as I said, what we've been experiencing for the last few months, I would say, is a very high order of retail euphoria. Meaning, one of the most striking incident which I witnessed a few weeks back was I found a vegetable vendor who was trading onto stocks. So we got to a stage where everyone was started dabbling into the stocks, and it had reached some sort of frenzy in some sense. So I think a correction was in the making or was anticipated at some point of time. And now that we really have it, given the fact that the rally preceding this correction has been very furious and very steep, the correction was bound to be a bit more sharper one, which is what exactly we're witnessing. But I still don't think so that changes the long-term course of the bull market. So I firmly believe that we very much remain in a very strong long-term bull market, and this is nothing but a correction in that.
Interesting. Aside of that, I also wanted to talk to you, Pankaj, about the euphoria within the IPO market. Nykaa, of course, was a standalone case, but many were raising eyebrows when you did have a very lukewarm response to the Paytm IPO, for instance. Valuation, of course, was a big concern. And then it's been for all of us to see how the stock actually listed and the kind of fall that it's had even in today's trading session. Many believe that Paytm will actually call the near-term top as well for the market. But that aside, you think a similar frenzy is also playing out in the IPO market, where some of the retail investors almost believe that why buy a stock? Just get into the IPO and you're going to make much more gains on the pop itself on listing day.
Absolutely, there is a huge amount of frenzy in the IPO market. There's no denying the fact, but this is very typical of any strong bull market, because this is what exactly we see. You go back to any of the bull markets, let's say the technology bull market of 2000 or the 2007 bull market, which peaked out on 2008 with the Reliance Power IPO. So every bull market has reaches a stage where we see huge amount of IPOs being done and huge amount of capital being raised through them. And some of these companies probably get priced very expensively in the IPO market, and which is where the retail investors end up making some losses. So while I firmly agree that there's a huge amount of frenzy there, but I think it's overall part and parcel of the cycles of the markets. And from a retail investor's perspective, I would strongly urge the retail investor to use mutual funds or take some professional advice, because India has a very well developed mutual fund industry, and probably use some professional expertise to create wealth, because I understand that trading into stocks can be profitable from a short-term perspective, especially in a bull market. But this is not always how markets are, and they can be tricky at times. So I would certainly advise retail investors to probably take some professional advice and help in managing their portfolio.
Makes sense. Pankaj Murarka, always good having you on the show, and thanks as always for chatting.